First, a few housekeeping notes. This video is being recorded and will be posted on our YouTube channel along with the links to the video on Facebook and Twitter pages so you can review. If you have any questions, feel free to put them in the chat box on your screen. We will have a Q&A at the end and try to answer those questions. If we don't get to your question, please check back when the recording is posted and we'll try to follow up with the questions we have missed. Let me introduce our speakers who will talk us through the first-time home buying process. Our first speaker is Norm Polsky, owner of Coldwell Banker Premier Group, the #1 Coldwell Banker affiliate in the state of Missouri. Norm has 35 years of real estate experience and has been the owner of CDP Group for 27 years. And our next speaker is Dan Burr, Senior Vice President of Heartland Mortgage. Dan has 25 years of mortgage experience and has helped over hundreds of people finance their homes, and some thought it was impossible to get a loan. Gentlemen, welcome and thank you for both speaking with us today. First, I want to kick it over to Norm, who is going to talk us through the real estate buying process today in the St. Louis area. Norm, welcome.
This opportunity, again, I'm the broker of Coldwell Banker Premier Group. I'm really excited for this chance to talk to people who are first-time home buyers. As Bill mentioned, 50% of the people buying homes today are classified as first-time home buyers. And in order to be classified as a first-time home buyer, you must not have owned a home or bought a home in the last 3 years. So you might have owned a home previously 3 years ago, but you still would have been, and you have not owned a home in the last 3 years, you would still be classified as a first-time home buyer and be able to take advantage of some of the opportunities just for first-time home buyers. As you know, this is one of the best real estate markets, not only in the history of St. Louis, but in the United States. That is due to the low interest rates. When I got started in real estate, interest rates were at 16 to 18%, and people were still buying and selling houses. Today, interest rates range from, and Dan will go into more about the loan process, but interest rates are going between 2.6 and 3.1%. Quite a drop from 16 and 18%. The benefit to the consumer, to those people who are buying, they can get a lot more house for their money today than they could have even a year ago when interest rates were at over 4%. So again, thanks for joining us. I would like to take you through a quick review of the home buying process and how to get started. The first step I would recommend as a real estate broker, of course, a little prejudice, is that you need to find an agent to work with. That agent can walk you through the steps of buying a home. When you find an agent that you trust, have a lot of confidence in, who has the experience to help you achieve your goals, they're going to ask you to sign what is called a buyer's agency agreement. The reason they're going to ask you that is that because the Missouri Real Estate Commission in the state of Missouri says that we cannot represent your interests unless you sign an agreement. That agreement could be for 1 day, it could be for one house, it could be for 30 days. But if an agreement isn't signed prior to going out looking at houses, that agent does not represent the buyer's interest. They represent the interest of the seller. So your agents should sit down with you and go over the buyer's agency agreement, and so they can represent your interests. If I was buying a house today, I would certainly want somebody representing me rather than the seller. So I think that's a key part of today's process of buying a home. After you determine who the agent you want to represent your interests, you probably want to work with your agent to find a lender who will help you start the loan process. And the first step in that loan process, and Dan will talk more about this, is getting a loan approval letter so that when you go out to find a house that you like, and you're ready to write a contract on it or make an offer on it, you have a letter from the lender saying that you're qualified to buy that home. It gives the seller a lot more confidence that this isn't just somebody who might or might not be able to get a loan on that house. The second benefit to you is it gives you some parameters as to how much home you can afford to buy. I think it's of great value. Some people, they find out that they can buy much more home than they thought they could buy. And sometimes, occasionally, they find out that they might have to pay a little less for a home than they thought. But it's a great tool to help buyers get started in this process. So next step, you'll need to talk to your agent and let them know what are the things that most are important to you in purchasing a home. A lot of people will just go out with an agent and run around and look at houses and go on wild goose chases. We like to sit down with the people that we represent, so we know that your time is valuable, and try to determine exactly those things that are important to you in terms of number of bedrooms, square footage, school district, communities. They'll take you through the whole process, determine exactly what you're looking for. A lot of people get real confused because the agent hasn't helped them sit down and determine what their specific needs are. So having this buyer interview is real key to the first step in purchasing your home. That agent will take you through the steps. Once they determine the things that are extremely important to you, they'll look up those homes that are available in the multiple listing service, and they will also put you into what we call a portal. That portal is designed to help you anytime a house meets your needs, anytime a house that meets your needs based on what you have told your agent, you will get an email as soon as one of those houses gets on the market. It's a unique program. So when an agent from anywhere within the St. Louis area puts a house on that meets your needs, you will be one of the first people to hear about it. Your agent will get a copy of that. And if you want to see that house, you can reach out to your agent and they can set an appointment for you to see that home. You want to be careful in talking to other agents, and the reason, other than the one that you signed that buyer's agency agreement with, because you don't want to give away your negotiating position. So use your agent to discover for you or get questions answered for you about particular listings rather than calling maybe the listing agent, because what you're doing is giving up some information that might cause some problems when you find a house and you're negotiating on that home. So you're going to sit down with your agent. You're going to go through the things that are important. You'll go out and look at homes. And one of the things that you should do prior to finding that home, and I'm a big believer in this, is that I would ask my agent for a copy of the sales contract that we are going to use when you find that home that meets your needs. You want to sit down and review that, because once you find a home that meets your needs, you're going to be so excited about it. You're not going to have an opportunity to review the whole contract. It might just slip by you. So ask your representative to see a sample copy of the sales contract that we use. It is approved by the St. Louis Association of Realtors and the attorneys here in St. Louis. So please make sure you ask them for a copy of that. Once you find a house that you like, you will use that contract to make an offer. In making that offer, that agent will take you through the contract so you'll have a better understanding of it. And again, you're going to have to offer some earnest money. That earnest money determines how earnest you are in making an offer. It usually takes 30 to 45 days to close on a house once you make an offer on a home. Once that contract is accepted, that seller, when you make an offer, has three alternatives. They can accept your offer, they can reject your offer, or they can accept, reject, or counter offer, or make another proposal to you that will work for them. You then have the option of accepting, rejecting, or countering that offer. So as we go through, once you get the contract accepted, there's still several hurdles you have to go through in order to get to a successful closing. One of those is that you will do a private building inspection. And that private building inspector, your agent can give you a list of what we call ASHI approved building inspectors. They meet certain criteria in order to be classified as a building inspector. And they've had, a lot of these people certainly have a lot of previous experience. They'll inspect things like termites, radon, lead-based paint, a number of things that they'll go through. They'll look at the roof, the plumbing, the electrical. And if you want to bring in any other engineers or any other people to look at the house, you're certainly welcome to do that. You will also have to make an official loan application for that particular property. You'll have to make a loan application for that particular property. And Dan will talk more about that in a few minutes in that loan application. You'll also have to, once the contract's accepted, you'll have to apply for household insurance for the company, for the house, excuse me. And you will also select a title company to work with that will give you, they'll check the title to make sure that the person selling the home is in fact the right person selling it. And also they will do a survey of the property so you'll know exactly what you're buying. We recommend that our buyers get a stake survey, and that costs a little bit more than a general survey. And the reason for that is it gives you title protection, whereas a general survey does not give you title protection. So it costs a little bit more, but it's well worth it when you go out and buy a home. After you go over some of these hurdles, oh, by the way, excuse me, let me back up for a second. The seller will have to do a city inspection, order a city inspection, to make sure that the property meets city code. It's not truly a building inspection. but just to make sure that the home is meeting city code. After the contract's accepted and we clear some of these hurdles, the last step, the second to last step, is to do a buyer walkthrough. Within 4 days prior to closing. You'll go with your agent, you'll walk through the house, you're able to bring your inspector with you, and to make sure that the seller has done everything that they're supposed to do in order to get the house ready for you. Everything that you have agreed to in the building inspection resolution. As I have mentioned to you a couple of times already, the most important step in this process is talking with a lender, speaking with a lender. And that lender will make sure that you're in a good position to buy that property that you find. So many times people will put the cart sort of before the horse, go out and look at a home, and then try to get a loan. I think the best way is to get approved first before going out to look at that home. And we're fortunate to have Dan Burr with us today. Dan is with Heartland Premier Mortgage, and he's going to share with you the steps in getting that loan. So Dan, let me turn it over to you.
It's all yours. Sneak in here. Thank you, Norm. I appreciate that. Bill, thank you for letting me be here today. Welcome everyone to our little webinar. And Norm stole my thunder a little bit concerning interest rates. Interest rates, as everyone probably has just been able to tell based on all the media that you read and everything, interest rates are at historic lows. So Norm and I are both been in the business a long time. I got my first loan at 11%. So anyone today that can get something low single digits like we have today, just a great, great opportunity for all buyers. So I think one of the very first questions that comes up, what do I need to do to purchase my first home from a loan standpoint? So really there's three things that are very important. Number one is your job. So you need to have a consistent 2-year job history, typically to get a mortgage loan. Secondly would be credit history. So you need to have a credit history and typically a credit score. There are some programs that allow for no score, but generally 90% of the borrowers are going to have a credit score. And the third thing that's most important is you typically need to have a down payment. You probably have heard before that people say you need to have 20% down. That's not true, so we'll go into that a little bit in details, but typically you need to have a down payment. So let's go into those details just a little bit. First of all, let's talk about the job history. So we want to talk about job as far as, 2-year consistent history. So the most important thing is that consistent word. We don't want to see any job gaps. That's the most important thing. So if you were to have a large job gap, that's going to be a problem typically to get a mortgage loan. But as long as you have a 2-year job history that's consistent, we can typically work with that. Okay? Then the other thing important to remember is income. We work with gross monthly income. All right. So as you're going through your income numbers, it's not what you take home, it's what your gross number is. An easy way to figure that out is take a peek at your W-2. Highest number on your W-2 is typically your gross monthly income. And you think, well, it's your annual income, excuse me. Take that number, divide it by 12, and that's your gross monthly income. Okay? From an income standpoint, we're simply going to measure that or put that in conjunction with your debts. We do a quick calculation. So if we know what your monthly debts are and what your monthly income is, we can basically tell you in a matter of minutes how much house you can afford. Okay? Talking about debts real quick, let's talk about exactly what a debt is. Some people think expenses are debts, such as a cell phone or something that's not true. Debts are only things that you pay interest on. Example would be car loans, student loans, revolving charges, MasterCards, Visas. Those would be your debts. Okay? So again, Heartland Mortgage Lending, if you give us a call, an email, a text, we can tell you what you can qualify for relatively quickly. Next important, what kind of credit score do I need to get a mortgage loan? There's lots of different loan programs out there for first-time home buyers, many different programs for just standard buyers, so scores can vary, but in a very general sense for a first-time home buyer, you need to have at least a 580 credit score, okay? If you don't have that score, we can actually advise you how to get there. There's different tactics. I'm sure you've maybe read, again, through the media as to what you can do, but we do a lot of that, so we're happy to help you with that as well, okay? But what's important too from a score standpoint, so I'm sure you maybe have heard of Credit Karma. There's services out there that you can determine your score, but those are typically different than mortgage scores. So it's really important to determine what your mortgage score is. You're going to actually have 3 scores, and we always base our loan decisions based off that middle score, okay? So if you can determine that score, it's going to go a long ways to determining whether you can get a loan or not. At Heartland Mortgage Lending, we can actually determine that score for you at no charge. We just need some basic information. And most importantly, when we get that score for you, it's not going to affect or impact your credit in any way or negative form. Okay? Okay, another kind of detailed question would be, how much of a down payment will I need? Again, historically, I think a lot of people have heard, oh, you need to have 20% down to buy a home. Not true. That has not been true for quite a while. We've been doing first-time home buyer lending for a number of years now with just 3 or 3.5% down. That's the typical down payment needed. Simple example, if you buy a $100,000 house, you need to have about $3,000 to get your loan, okay? That's not the only expense you're gonna have. Norm mentioned in the purchase process, you do have other expenses. So you have closing costs when you go to close the loan. Closing costs are things such as title charges, appraisal. You have to pay your real estate taxes typically up front. You have to pay your homeowner's insurance up front. So at the closing table, you're going to have a number of other expenses as well. Again, based on purchase price, we can give you a good estimate of what those closing costs are. Simply call us up, email us, and for every purchase price, we can give you a very close estimate as to what your closing costs will be. Okay. Another thing that comes up is, well, what kind of documentation do I need to get pre-approved or pre-qualified? That's actually very simple. For most borrowers, we need to see a W-2 from the most recent tax year. So today we're looking for 2019 W-2s. We need to see 2 most recent pay stubs. That's going to tell us, again, what your gross monthly income is. We need to see bank statements that shows that you have the down payment or the funds to buy a home and close with closing costs. So we want to see your most recent consecutive 2 months bank statements. It doesn't have to be a traditional bank account. If you have a savings account or a brokerage account, those are all acceptable type of accounts. Lastly, we need to see someone's personal identification. So for 90% of the borrowers, it's going to be your driver's license. But if you don't have a driver's license, you have a state ID, passport, we can work with that type of documentation as well. I kind of want to go back just real quick as far as the down payment goes. Some programs that are out there that do allow for no money down. So there's actually a loan called the Veterans Administration Loan or VA loan. That's for people in the armed forces, and I think they deserve it, but the government is giving them a subsidized loan. So you can actually do a loan if you're a veteran with no money out of your pocket whatsoever. So that's a great loan for good people. Also, there's what's called a USDA or United States Department of Agricultural loan. Again, a loan subsidized by the government where you can get 100% financing, no money down. That loan, though, is restricted to rural areas. So rural areas would be typically maybe an hour or so outside of the metropolitan area. An example here in this area might be, if you're familiar with Barnhart, Missouri, potentially could qualify for a rural housing type transaction. So I just want to kind of give you a little bit of a flavor for what's out there. But again, most people looking in the St. Louis area for first-time home buyers just estimate 3 or 3.5% is what you would need from a down payment standpoint. Basically, it's what I have. Now, I wanted to keep it simple, but I'll open it up for questions.
Norm and Dan, thank you for all the great information tonight. Just a reminder, if you have a question, please ask your question in the chat box. I see a couple questions in the chat box right now. Dan, I know I need a down payment. Can I borrow that from a family member?
Great question. And yeah, in most cases, you can borrow it. Family member is important. For the most transactions or most loans out there for first-time home buyers, the gift does have to come from a family member. That could be grandpa, grandma, father, mother, brother, sister. Actually, fiance would qualify as well. But your gift can actually take care of your down payment and your closing costs. So for a first-time home buyer that has a gift, you can actually get into that transaction without any of your own funds.
Excellent. Next question is to you, Dan, again. If I filed bankruptcy 5 years ago, can I get approved?
Bankruptcy, to answer specifically, the question would be yes. Most bankruptcies have to be discharged or erased, if you will, for at least a 4-year period. So it would be possible.
Awesome. Looks like the next question comes. It says, how much does it cost to get started?
That's an easy one. 0. So we don't charge anything to take an application. You can actually fill out an application online on our secure online link. We can do it in person. We can do it over the phone, but there's no cost to get a loan started.
Awesome.
I have a question for you, Dan.
Sure.
What we run into some first-time home buyers that have not had a credit established. You know, they might be right out of college, or for one reason or another, just haven't established credit yet. What can they do?
It's going to be more difficult without any kind of a credit history. I'm not going to say it's impossible, because we can build what's called manual credit, such as cell phone, insurance, things of that nature. So we can try to build a credit profile. Again, those are very case by case. So for most borrowers, if you do have some credit, it's going to be a much easier process.
You know, one of the questions we get as realtors sometimes is, can the seller pay my closing costs in getting a loan?
Absolutely. So sellers definitely can pay closing costs. There's limitations as to how much they can pay. So it kind of depends on the loan size and the transaction. But in a very general sense, for the first-time home buyer program we talked about, with just 3% down, the seller can pay up to 3% of closing costs.
3% of the loan amount or the sales price?
Of the sales price. So example, $100,000 loan, they can pay $3,000 in closing costs, which on a $100,000 purchase is probably about 75% of the closing costs.
So that's a pretty good deal for
Absolutely. Absolutely. That kind of goes back to your area, Norm. So that would have to be negotiated, right? You need to negotiate that into the sales contract, but very, very possible.
It's not unusual today to see first-time home buyers asking the seller to pay for closing costs.
See it all the time. It happens very frequently.
Dan, we have another question. Are there going to be any adjustments to the tier job requirement as a result of the current pandemic? Can you provide any insights into our first-time home buyer funds? I have other lenders tell me there are fees and it adds complexity.
Let's talk about the situation with COVID first. So that's a really good question and super pertinent to what's happening today. So the general rule of thumb would be, if you were employed prior to COVID and your job was impacted through COVID, so let's say, for instance, March, April, May, you were not working, maybe you were collecting even unemployment, but in July, you've gone back to work. As long as you're back to work and you've collected a pay stub, typically, sometimes it's 2, so it kind of depends on the investor. We're basically going to look at that period where you didn't have income and kind of just forget about that. Go back to what you made prior to COVID and what you're making after COVID or back to work. And as long as you're back to work, it's possible to still qualify for a loan. If you're not back to work on a full-time basis, that actually could be an issue. So you really need to go back to where you were prior to COVID. So technically we refer to those as furloughed workers for the most part. So if you've been furloughed and you're back, you actually can still qualify for a loan.
Dan, let me ask you this. I see it every once in a while. If I'm an accountant and I lose my job for some reason, and I find another job as an accountant, is that the same as a 2-year track?
It is, as long as there's not a large gap. So the key would be the gap. So if you have a job as an accountant, as you mentioned, for whatever reason you've lost that job, and you find that job pretty quickly, I'd say usually probably a period of 30 to 60 days. Most accountants are salaried, so in most cases that wouldn't be a problem. Okay. Second part of that question, let's see, any site first-time home buyer funds. Yeah, so funds would be, I mean, funds can be a tricky situation. So when we talk about funds, funds are money that you basically had or have, okay? And we use a term in the mortgage business called seasoned. So you need to have those funds, they need to show in your account for a certain period of time. That period of time typically is 60 days. If you have some money that just appears in your account all of a sudden, that potentially could be an issue. So if someone, say, for instance, was saving cash and all of a sudden put it in their bank account, the underwriter is going to ask where that cash came from, and you need to be able to source it. So unfortunately, cash in your mattress is not a good reason. But if it were like a tax return or something like that, yes, you can use those type of funds.
Looks like Lisa's asking about the MHDC for first-time home buyers, Dan.
Yeah, MHTC is a program put out by the state of Missouri. So it's a first-time home buyer program. Typically, it's done with a grant. It's a forgivable grant, but if in fact you were to sell that house, you'd have to pay that grant back. So there's some complexities on that. I don't want to get into too much detail, but it's certainly out there. That program kind of comes and goes based on funding. So it did actually go away for a little bit recently during COVID, but it is now back. So, but it's definitely a good program if you can qualify. There's an income limitation for that program as well. So, and as well as a loan size limitation. I believe you can't buy anything greater than 159, and the income limitation, I would probably want to get back to you, so I don't want to misspeak on that.
Dan, you gave me some, Lisa says thank you.
Yeah, not a problem.
All right, here's some quotes that Dan gave me. 50% of all Fannie Mae purchases applications are currently first-time home buyers. And housing affordability conditions improved in 2020, according to the National Association of Realtors. That's all the time we have today. Oh wait, Norm has something.
Just one other thing real quickly. As most of you know, or maybe you don't, is that there is a real shortage of houses on the market. Houses are selling very, very quickly. There's a 2.5-month inventory of homes. Generally, there's usually a 6-month inventory of homes. And so being prepared to buy that house is extremely important in today's market. And having a lender approve you is the most important thing somebody can do in today's real estate market to get started in the home buying process. So we here at Coldwell Banker Premier and Heartland Mortgage Lending are here to help you. And on the screen, it shows how you can contact either of us or both of us to help you in the loan buying or the home buying process.
Again, thank you for joining us today. A special thanks to Norm and Dan for lending their expertise on first-time home buyers process. We will be sending out this recording, and we will also have it on our Facebook page and our YouTube channel. Thanks again, folks, and have a great evening.
Thanks, everyone.
Thank you.